what's up, guys? Welcome to this webinar with Marco and myself. I'm Nathan Hall. I work with Marco here in Nerada Capital Management. Many of you guys have probably heard me on the phones already if you are watching this. So it's good to put a face to the name, I suppose. We're doing a quick webinar today, hopefully 20 quick minutes for you on what we think are some of the 5 most frequently asked questions at Nerada Capital Management. So if you're also watching this and meeting Marco for the first time, Marco, say hello there if you could.
Welcome, everybody. Hello.
Love it. Just so you guys know, on my end, Marco has been a good mentor to me. He's been in this industry for, 2 decades now on the real estate world. And many of you now know that he's a serial entrepreneur and works a lot in the promissory note world as well. So we're going to dive in here. Talk about some frequently asked questions in Nerada Capital Management. And so what I'm going to be doing is I'm going to be playing kind of the role of the client, and Marco is going to be playing the role of kind of asking or answering these questions, because these are important things to know as an investor if you're trying to make a decision on investing with us here. So sound good, Marco?
Oh, that's perfect. I think it's a very smart thing for us to do to provide prospective investors that are looking at investing with us answers to some of the most frequently asked questions. And I know between you and Michael and the rest of our team, we get certain questions over and over again. And
yeah,
I think it's just wise for us to do this quick webinar, 20 minutes or so, and answer these questions, or at least allow me to answer them, maybe on your behalf and, on Michael's behalf. So people can hear what my answers are to those questions and maybe get a little bit of a different perspective on it. So let's do it.
Sure. All right, let's start off here. So Marco, one of the most frequently asked questions typically is, how long has Nerada Capital been doing promissory note offerings, and a little bit of the history and the background behind that?
Sure. So in order to answer that question, we kind of have to go back a little bit further than the 3-year or so history that we have as a company formalized as Nerada Capital, or Nerada Capital Management, as the full name. 2012-ish was when I first started issuing promissory notes, but they were always project specific. So over the years, we would raise, millions of dollars for various projects. And those were always limited in scope, meaning it was a specific project and it had a finite amount of capital raised. And then as the years went by, we were in and out of different projects, often real estate based. And in 2015, I think it was 2015 to 2018, or 2016 to 2019, I believe it was 15 to 18. For 3 full years, we offered, we had a revolving line of credit, if you will, with investors coming in, lending us capital under the pretty much the same terms we have today. And we were just tapping into a lot of capital to buy fix and flip property, mostly in Missouri. And we turned several hundred properties over that time frame. It was a lot of volume. We got out of that because the inventory was drying up, competition was increasing, and the margins were diminishing. So it was becoming more and more brain damage than anything else, and it wasn't a profitable venture any longer. So I was winding out of that, and fortunately, at the same time, I kind of made a pivot, if you will, into investing in e-commerce based businesses, slowly at first, and then that took a pivot and ramped up. So as we were getting out of the real estate space, which didn't have the margins to support the notes we were issuing, we as in partners of mine and myself were getting into the e-commerce space. So there was 3 full years of note investments and capital in the real estate space, and then that shifted or morphed into business-based ventures as opposed to real estate-based ventures, and that's where we still stand today. We've got a kind of a diversified portfolio of business ventures in Nerada Capital now, and a very small amount, about 5% of it, is real estate based. So we've kind of drifted away from real estate and moved into other ventures that show higher upside potential, are more lucrative for us, and that's where we are today.
Yeah, and I find that unique because a lot of investors are used to maybe a promissory note offering in the real estate side, or they've invested in maybe a syndication on the real estate side. But to be investing in the promissory note world and businesses is a unique option, right? And a lot of people are just learning that, and that's why it's, I think, unique to answer some of these questions. So, and we can certainly answer some more of those questions for you whenever you speak to Michael and I as well. Okay, so great background. I appreciate it, Marco. You have, a 10-year ish plus history now of doing note offerings. Sounds like Norada Capital Management's been around for roughly 3 years as you guys have grown, expanded, and you've gone from, e-commerce space all the way into land development and, real land development. What do we have as well? We've got some crypto. We've got, a broad musical productions company. So pretty eclectic mix of businesses in there, right? Can you explain, one of the biggest questions you get as well is, can you explain how the fund works? So you have these businesses that Norada Capital Management is equity owner and partner in. How does it all kind of fit together and operate?
Yeah, so this is pretty much a simple answer. If you're on the inside looking out of Norada Capital, it's essentially a private equity firm. It's a PE firm. Mm-hmm. So Norada Capital is making acquisitions into varying degrees of ownership and equity in various ventures, which I can break down into 5 categories. From the outside looking in, Norada Capital looks like a fund because we're raising capital, and we're doing that through a debt instrument called a promissory note. So we're essentially issuing or selling promissory notes, raising capital, private money, private capital coming in, and paying, a favorable yield on that, which makes it attractive for the investor. And I mean, we can go off on a tangent on that and talk about, the benefits of that and beating inflation and why it makes sense to have that in a self-directed retirement account of some kind, et cetera, et cetera. But the reality is outside looking in, we look essentially like a fund. We're raising capital and we're arbitraging that capital into investments and business ventures that provide us high alpha, higher returns. So we might borrow $1, but we can turn that dollar into $2, $3, $5. And so that's kind of the short answer to your question. It's essentially, Norada Capital is a private equity fund that happens to be raising capital to make additional ventures or investments into ventures that we add to our portfolio. And this particular offering is not going to be around forever. I do tell investors that I don't have a crystal ball, but I will say that it's probably going to be around for probably the next 2 to 3 years, because at some point we're going to just be paying the notes off. We'll just satisfy the notes and maybe not even renew them and stop raising or limit the amount of capital that we're raising, because 1, it's a function of deal flow, but 2, as these ventures become more and more profitable for us, we'll be in a position where we can self-fund new ventures going forward, because that profit needs to be deployed. We just don't want to keep, tons of capital in our retained earnings in the fund. We want to redeploy that into new investments. So that will increase, and private capital from the outside will decrease because the need for it will diminish. But again, that's subject to deal flow.
Yeah, got it. So as you're growing Norada Capital, and we're still, you're obviously looking at underwriting new opportunities pretty consistently here now at this point. This kind of goes into the third question. I would say the third most frequently asked question is, how does this help our clients mitigate risk? So how does Norada Capital manage to help mitigate risk, especially kind of in these uncertain economic times at the moment? We've got raising interest rates. Depends on who you listen to in the news, if we're doom and gloom, if we're going to be doing okay. So how do you think, the company, the portfolio of companies in capital management helps mitigate that?
Yeah, it's a very good question. And when I first get on a phone call with an investor, although I don't do that as much now because, you and Michael and the team are handling that for the most part. One of the first things I used to say is that this is not a real estate-based investment or a real estate-based fund. And the reason I want people to understand that is because, first of all, sometimes people ask, well, how is it you're able to pay, 10 to 12 or 12 to 15% interest? Well, the first reason is because this is not real estate based. I mean, the cap rates and cash on cash returns in real estate are just too small right now to be able to provide that. I mean, you could look at multi-unit syndications and other types of investments right now that are, raising capital, but they're not able to pay that type of return. It might be a 6 to maybe an 8% preferred return. So that's the first thing I tell them. Then the other thing I let them know is that the majority, almost all, but the majority of our investments are businesses, business ventures, and so they have they're far more scalable. Well, they're scalable, period, but they're far more scalable than real estate. Second, the margins can be very, very attractive. In fact, one of our business ventures has a 95% profit margin. Third, we're diversified across what I call 5 categories, and that diversification is really what plays into heavily that risk mitigation. So you're not putting all your eggs, quote unquote, in one basket.
Mhm.
It's not all in equities. It's not all in the stock market. It's not all in gold and silver. It's not all in a commodity or oil and gas. It's diversified. So big picture, the 5 categories that we focus on at this point in time, and this is subject to change, but it's not likely to change much at all, are what I call mastermind businesses. And, that's kind of another question and maybe another conversation for another day, or maybe I would just encourage, in fact, I highly encourage someone listening to this to talk to you or Michael or Liz or, their investment counselor about what our mastermind ventures are, because they're highly profitable, highly scalable. We're doing some big things, and just to throw some teasers out there to encourage people to actually talk to you, Nate or Michael or whoever. We are working with Kevin O'Leary, Mr. Wonderful. We are working with Marcus Lemonis from CNBC's The Profit, who has another show coming out next month. We are working with guys like Alice Rodriguez, or A-Rod, for short. The Real Wolf of Wall Street. I mean, we're working with a whole crew of people that are helping us build, or at least promote, but build these ventures, and they're involved to some degree. But the mastermind component is the largest component of our portfolio. And just to kind of wrap this question up, in a minute, rather than talk about it for an hour, which I could, about a third of our businesses right now are e-commerce based, and we've made it over the years some very interesting, attractive acquisitions of distressed name brand businesses, took over their intellectual property, turned them into exclusively online businesses. We're going through a careful restructure right now with those businesses to make them more profitable. The third category is theatrical productions. We're involved in some great productions, including the Neil Diamond musical called A Beautiful Noise, The Devil Wears Prada, and several others. So we're significant, like we're major investors in those productions that are doing very, very well. Fourth is a real estate component. There is some real estate in the holdings, and we also have a land development company that deals directly with nationwide home builders like D.R. Horton and Stanley Martin. So that is also, it's a very slow moving business, but it's a very profitable business. And then last is we have a very, very small crypto component. Think of it as an inflation hedge, based on research and data that I've collected since 2017. That could become quite literally a 9-figure component. That's a big number, but anyway, when we get there, we get there. So those are the 4 or 5 components. So long story short, that diversification is what helps mitigate risk. So it's about that diversity, the capital preservation that we believe these businesses have, the scalability of those businesses, and the profit, the current, and more importantly, the future profit potential that those businesses will generate for its investors, which includes the fund.
Yeah, I love that. And one of the things I'd like to add to that as well is when you're creating the actual note and the promise note itself, we're not tying these notes directly to one of those business sectors or one of those companies. So when we're talking about mitigating risk, the note's not created between, me, Nathan Hall, and Marco's Devil Wears Prada business. It's between Nathan Hall and Neurotic Capital Management, which gets the benefit of the different profit centers of those companies, correct?
Yeah, and I'm glad you brought it up because I can't believe I forgot to mention that, but you're right, 100%. Yeah, good point.
Yeah. Okay, great. Yeah. All right. So moving along here, guys, I know we're trying to be concise for you. One of the other questions we get a lot is you brought this up a little bit earlier about borrowing capital at higher rates of return from our private investors, right? So I guess I would frame this as, what's the strategy behind borrowing capital at 12 to 15%, where, you could go to, let's say, an institutional lender and borrow at maybe 6 to 8%, something like that?
Yeah. Okay. So very good question. Very short, concise answer to that. It's actually pretty simple. If you look at any of the acquisitions that we're making, or you look at the ventures that we are starting, as in startups or growing, in the eyes of an institutional lender like a bank, for example, they look at that and they say, well, we love your idea. I think it's got a lot of legs, but it's basically a startup. And so it doesn't check all the boxes for a bank or any other large institutional lender that has a very strict lending criteria. So unless you check all their boxes, and by the way, they're extremely conservative, they don't take on risks. They want a sure bet. They want to see that it's a large, well-capitalized company that's been in business for 3 to 5 or 5 to 10 years, or it's real estate where they can put a security instrument like a mortgage on that collateral to collect. So, they're not in the business, they're in the business of lending money, but they're not in the business of taking risk. So when they look at what we're doing, they love it and they want to be a part of it, but it's too early for them. So they won't lend on it because we don't check all the boxes for them to be able to lend to us. So what do most capitalists and entrepreneurs do? What do most businesses do? They tap into private money. It's the public, It's the private market. And for those that are not aware, I mean, a sophisticated investor is going to be aware of this, but for someone listening to this, the majority of capital that's raised out there, and this is especially true with new businesses, new ventures, and business launches, et cetera, and even companies that are growing and scaling in their early stages, always go out to raise equity. They raise equity, which is private money or debt, debt or equity, but it's always the private market. So that's kind of the long and short answer to your question. It's the only option out there.
Yeah. And I think to counter that and follow up with that, it's that, the choice of paying a higher interest rate to accredited investor. Let's remind us that we work with accredited investors, right?
Yeah.
So we typically, a lot of times, are a little bit more sophisticated. They've done private money lending before. That it is quite, I'm going to say this word, normalized, right, for a lot of accredited offerings out there to be 10+%, right, to be double-digit returns. Is that fair to say?
I've seen it all over the board. I mean, private capital can be raised and returns can be as low as 4 to 6% pref, pref returns. If it's real estate based, it can be 4 to 8% preferred returns. If they're business ventures, they could be all over the board. Like businesses, you even look at peer-to-peer lending. Peer-to-peer lending can be as little as 4% to as high as 20 to 30%, but really don't know what you're getting into and who you're lending it to. It's usually one individual, one project. So, that carries its own set of risks. But short answer to your question is that it's not unusual to see 8, 10, 12, even 15 and 20% returns on offerings like this. In fact, it's kind of funny that we're even talking about this right now, because literally in the last 1 to 2 weeks, I've had 2 people contact me looking for short-term money, like a note that's less than 1 year. One is one of my attorneys that I've been doing work with for many years, and they just know what we do. And he came to me and said, look, I've got this business. I've got a business who's a client of mine. They need some bridge financing.
Yep.
They're willing to pay up to 15%, maybe more, for a 90-day note. Yeah. So amortize that, like annualize that. That's 30, that's 60. What is that? 60% per year.
Yeah.
And it was secured. It was secured by the goods that of the trade. That it was a coffee company, by the way. So it was secured by the commodity. And I could have just, flipped a deal and made 15% in 90 days. And now I passed on it. But I mean, I get these often. I've had at least 2 in the last 2 weeks. So it's not uncommon, but this is just how businesses function. It's that capital and liquidity, and it's often short term. It could be less than a year, but sometimes it's like us, we're doing 2, 3, 4, 5 year notes, maybe, or more. But
sure.
But that's how businesses start, grow, and scale.
Yep. Love it. Okay. So last question, a lot of people ask this, of course, is how do I get started? Like if it's something I want to take action on, I want to invest, what are the next steps?
Well, there's only 2 answers to that. One is stay in touch with your investment counselor here, whether it be you or someone else on our team, because you're kind of the, figuratively speaking, person that will hold their hand, guide them through, even though the process is pretty simple. There's nothing complicated about it. Stay in contact with your investment counselor. They can continue to answer other questions that we haven't covered here today. And then second is just fill out the investor profile form, which will only take you about 1 to 2 minutes. It's online on our website. I'm sure you'll provide that information, but just to record it here, noradacapital.com/profile is for the interest-only notes, and noradacapital.com/ I believe it's amortize.
Correct.
Is for the amortized note. So you have a choice between the interest-only with a balloon payment note, or the fully amortized note that just is fully paid off with interest each month over the course of the term of that note. So those are the two ways to fill out the profile form. It takes 2 minutes, but definitely stay in touch with your investment counselor.
Yeah, I love that. And I like the simplicity of it. I tell a lot of the investors that get started, it's one of the more passive, if not the most passive option you can choose. Everything's automated, right? We have a finance manager that will set you up with certain things, which we'll cover in our call, but great answer. And Marco, I thank you for taking the time to answer these questions. And we look forward to working with you if you're watching this and you're out there, and have a great day.
Yeah. Thank you, Nate. I appreciate you taking the time to do this with me.
Yeah, absolutely.
Thank you.
Be well.